Hi everyone, and welcome back to BullionIQ. I hope you're all having a great day. If you're new here, this is the channel where we break down what's really happening in finance, crypto, and the global markets in a simple, honest, and practical way. No hype, no noise, just clear analysis so you can make better decisions. Today's video is important, and I want you to pay close attention because what I'm about to share is something we've seen before. And the last time it happened, the market delivered massive returns. We just came across something that honestly stopped me in my tracks. It's one of those moments where if you understand the pattern, you immediately know why this matters. The last time we saw this setup in the crypto market, especially across altcoins, we saw average moves of 10x, 20x, and in some cases even 30x. That's not speculation, that's history. And history has a habit of repeating itself when the conditions line up again. Before we go deeper, I want to talk about something many of you have been asking about in the comments and messages, the possibility of an oil price spike. This matters because oil doesn't move in isolation. Oil affects inflation, currencies, interest rates, and ultimately risk assets like crypto. So yes, we'll cover that first, but I strongly suggest you stay until the end of this video, because what's coming in the upcoming week could be a big turning point for the market. If you enjoy discussions around Ripple and XRP, type an X in the comments, hit the like button, and let's get straight into it. Now let's start with the situation involving Venezuela and the United States. There's been a lot of confusion and mixed opinions about whether recent developments could cause oil prices to spike. To understand this properly, you can't just look at headlines. You have to look at supply chains and historical behavior. When disruptions happen, whether political, military, or economic, the market often reacts first and asks questions later. Historically, events that disrupt oil-producing regions, even temporarily, tend to cause short-term spikes in oil prices. Not because the world suddenly runs out of oil overnight, but because uncertainty enters the system. Traders price in risk, and risk creates volatility. Venezuela's oil production today is already relatively low, roughly around 800,000 to 1 million barrels per day. That's not enough to control global supply on its own. However, when exports are disrupted and combined with political instability and external pressure, it creates short-term supply concerns. Even AI-based market models point to the same conclusion. In the short term, yes, oil prices could spike due to supply uncertainty and fear in the market. But here's the part most people miss. Long term, this kind of pressure often leads to restructuring, new supply routes, and eventually lower prices. So the takeaway is simple: short-term volatility, long-term normalization. This is important because short-term oil spikes can shake financial markets and push capital into or out of risk assets like crypto. Now, this is where things start getting really interesting. I want to talk about 3 charts I came across, and in my opinion, they are absolutely mind-blowing. The first one highlights a very clear pattern: years of altcoin compression. If you've been in crypto long enough, you know exactly what that means. Long periods where prices go nowhere, sentiment is low, and most people lose interest. But historically, altcoin compression only ends one way. It ends with expansion. And even major global events, including wars and geopolitical stress, have not stopped that expansion once it begins. The second chart looks at what happened in 2017. Altcoins broke out of a multi-month downtrend, and what followed was a market expansion of roughly 20x to 30x over the next year. The third chart focuses on the 2020 breakout. Once again, altcoins broke a similar downtrend, and in 2021, we saw 10x to 15x gains across major and mid-cap projects. Different years, different narratives, but the same outcome. What really caught my attention, though, is something even bigger. Long-term momentum on altcoins has just flipped bullish for the first time in years. The last time this exact shift happened, altcoins exploded with average gains between 10x and 30x. This isn't daily trading noise. This is long-term structure changing. If you're a long-term XRP holder, you already know how this asset behaves when momentum truly kicks in. XRP doesn't crawl higher. It explodes. It moves fast, aggressively, and often leaves people behind. Those waiting on the sidelines for the perfect moment usually miss the move entirely. XRP doesn't wait for comfort. Market conditions can change very quickly, especially when driven by macro factors. I want to be very clear about my approach here. I am not a day trader. I don't stare at charts all day looking for tiny moves. I'm a fundamental investor. I focus on what's happening in the world: macro events, liquidity, regulation, and institutional behavior, because those forces dwarf short-term technical signals. Technical analysis has its place, but it doesn't drive markets. Capital flows do. Let's focus in on XRP and why I'm so bullish right now. This is where the story gets really interesting for long-term holders and anyone paying attention to the bigger picture. XRP is not just another cryptocurrency. It's a digital asset with a specific use case, real-world adoption, and a history of responding aggressively when macro and institutional factors align. First, let's talk about recent market moves. A few days ago, XRP was sitting in the low 180s. From there, we've already seen about a 17% move, which might not sound huge. But remember, this happened during a weekend, a period typically marked by low volume and liquidity. Normally, weekends are quiet for exchanges, trading activity slows down, and price movements are muted. Yet, even in these low-volume conditions, XRP has shown strength. That's a signal. When an asset moves during thin markets, it often indicates that underlying demand is strong enough to overcome normal friction. Now let's look at why I think this is just the beginning. Institutional interest is pouring in. XRP ETFs, for example, now manage over $124 billion, and inflows are continuing. Institutional capital behaves differently than retail. Institutions don't trade on emotion. They trade on strategy and long-term outlook. And here's the crucial part. As these institutions lock up XRP in ETFs or other structured products, the active circulating supply on exchanges decreases. Reduced float combined with increasing demand is exactly what causes supply shocks. When supply is tight and demand picks up, prices don't just rise. They can accelerate quickly, sometimes parabolically. On top of that, there are regulatory and adoption signals that investors should not ignore. For example, Ripple's ongoing application to be recognized as a national trust bank might not be finalized yet, but developments like this create optimism. When the market sees potential regulatory clarity or adoption, confidence rises, liquidity returns, and new capital enters. These are fundamental factors that can drive explosive moves, often faster than anyone predicts. Another reason I am very bullish is based on historical patterns in altcoins and XRP itself. Remember the charts we discussed in the first part? Every time altcoins broke multi-month downtrends, 2017, 2020, 2021, they experienced massive gains. XRP, being one of the major digital assets, tends to move with or ahead of these trends. Long-term momentum flipping bullish on altcoins is a leading indicator. It tells us that XRP's trajectory could be extremely positive in the months ahead. It's also important to understand the macro factors in play. Supply chain disruptions, global geopolitical events, and shifts in liquidity all affect capital allocation. Investors move money into assets that are poised to benefit from these changes. XRP, because of its adoption by financial institutions and its unique position in cross-border payments, is perfectly positioned to capture some of this inflow. As global markets react to events like oil volatility, interest rate changes, or geopolitical tensions, money often flows into crypto as an alternative. Let's break this down further for clarity. Think of it as a simple equation. Institutional inflows plus reduced float plus positive macro signals, potential for explosive price movement. None of these factors alone guarantees a 10x or 20x gain. But when they converge, like we're seeing right now, the probability of a significant move increases dramatically. XRP holders who understand this aren't waiting for perfect conditions. They're positioned and ready. Now, I want to address a common misconception I see in the community. Many people focus purely on technical charts, looking for patterns, trend lines, or daily fluctuations. Technical analysis is fine, but it doesn't account for real-world supply shocks, macro events, or institutional behavior. The real drivers of price are liquidity and capital flows. For example, the $124 billion locked in XRP ETFs isn't just a number. It represents a reduction in available supply, a tightening of market float, and an increase in potential demand pressure. Combine that with bullish macro conditions, and you have a recipe for a sharp move. Lastly, I want to emphasize timing and patience. XRP isn't about jumping in and out daily. It's about understanding where the market is headed, positioning accordingly, and allowing the asset to perform over time. Short-term swings will happen, they always do, but the long-term trend is what really matters. Right now, all the signals, momentum flipping bullish, institutional inflows, regulatory optimism, supply tightening, are pointing in one direction. And if history is any guide, long-term holders could see substantial rewards. So, in the upcoming week, I expect to see continued strength in XRP, possibly leading to breakout movements across other altcoins as well. The combination of macro events, institutional flows, and fundamental adoption creates a unique environment that doesn't come around often. Understanding this is key. Those who act thoughtfully, strategically, and with patience stand to benefit the most, because this is where theory meets reality. If you've been following crypto for a while, you know that charts tell a story, but only if you understand the context behind them. So, I want to break this down in a way that's simple, clear, and actionable. First, let's look at historical breakouts in altcoins, because XRP rarely moves in isolation. In 2017, After a long period of consolidation and sideways price movement, altcoins broke their multi-month downtrends. The market then exploded, creating hundreds of crypto millionaires almost overnight. Gains of 20x to 30x weren't uncommon for certain projects. In 2020, a similar setup produced 10x to 15x gains across major and mid-cap altcoins. These events weren't random. They followed periods of low volatility, accumulation, and a shift in long-term momentum. Fast forward to today. XRP is showing similar characteristics. Long-term momentum has flipped bullish for the first time in years. Supply on exchanges is tightening thanks to institutional inflows, and new capital is entering the market. When you combine these factors, the market setup looks almost identical to past periods that led to explosive gains. That's not hype. That's pattern recognition. Now let's talk about short-term catalysts. Events like U.S. military involvement in Venezuela and potential oil price volatility create macro uncertainty. Why does this matter for XRP? Because during periods of macro risk, investors look for alternative assets. Crypto, and XRP in particular, often benefits from these flows because it is highly liquid, globally accessible, and increasingly backed by institutions. The combination of macro risk and institutional interest is a powerful driver that can accelerate price movements faster than typical retail-driven rallies. Looking at the chart specifically, there are a few key indicators to watch. First, XRP recently broke a minor resistance range after a period of sideways movement. This breakout is confirmed by volume trends and is supported by institutional inflows. Volume is still relatively low because we're moving through a weekend period, but that actually makes the current momentum more significant. When liquidity returns in the week ahead, the breakout could amplify. Another chart pattern to note is the altcoin compression ratio. Historically, when altcoins are compressed for months or even years, the eventual breakout tends to be explosive. XRP's recent performance mirrors this pattern. Long periods of stagnation have built a foundation for a strong upward move. Essentially, XRP is coiled like a spring, and all it needs is a catalyst to release the energy. Now let's consider potential price scenarios. In the short term, we could see 10-20% daily moves during high volume periods if market conditions align with inflows and macro catalysts. Over the next few months, if historical patterns repeat and XRP continues to benefit from institutional accumulation and supply tightening, it's reasonable to anticipate multi-fold gains similar to past altcoin waves. Remember, this isn't a prediction. It's a framework based on historical data, market dynamics, and current institutional behavior. I also want to emphasize risk management here. Even when the market setup looks perfect, no asset is guaranteed to perform. Volatility is inherent in crypto, and unexpected macro events can temporarily reverse trends. That's why understanding position size, timing, and long-term perspective is so important. Those who plan for volatility and act strategically usually outperform those who chase short-term spikes. Let's also revisit the supply and liquidity factor, because it's critical to understanding XRP's potential. When institutions lock XRP into ETFs or structured products, those coins are effectively removed from active circulation. This creates a tightening of supply, which, combined with growing demand, can trigger a supply shock. Supply shocks are exactly what cause parabolic moves. The math is simple. Lower float plus higher demand starts faster price acceleration, and we're seeing this pattern unfold right now. Finally, a few words on psychology and market behavior. Many retail investors panic or hesitate during early breakouts, waiting for confirmation or fearing a reversal. Meanwhile, institutions and long-term holders capitalize on the early stages of momentum. Understanding market psychology is as important as understanding charts and macro events. XRP has historically rewarded those who stay patient and prepared, rather than chasing every headline or daily fluctuation. In summary, the current setup for XRP is compelling. Historical patterns, institutional inflows, tight supply, macro catalysts, and bullish altcoin momentum all align. Short-term spikes are possible, but the real opportunity is in positioning for a sustained upward trend. If history repeats, long-term holders of XRP could see gains that outpace most other assets in the market. This is a huge part of why I'm so bullish right now, and it's also where retail investors can gain a real edge if they understand what's happening behind the scenes. First, let's define what's happening with institutional inflows. XRP ETFs currently manage over $124 billion, and this number is growing steadily. Institutions operate differently from retail traders. They don't react to short-term hype. They look for assets that can deliver long-term stability, liquidity, and growth potential. When an institution buys XRP and locks it into an ETF, those coins are removed from active circulation. This is called a float reduction, and it's one of the most powerful factors that can push prices higher over time. Why is float reduction so important? Think of it this way. The market only reacts to coins that are available for trading. If demand increases but supply is limited, the price naturally rises. This is exactly what we're seeing now. The more XRP is locked up in institutional products, the less there is floating on exchanges, and the tighter the supply becomes. That combination with growing demand, both retail and institutional, creates what I call a supply shock scenario. Supply shocks historically have caused parabolic moves in XRP and other altcoins. Next, let's consider ETFs themselves. ETFs bring legitimacy to an asset. When a financial product is available for institutions to buy, it signals confidence in regulatory approval, market infrastructure, and long-term viability. Retail investors often underestimate this, but it matters a lot. Institutional money tends to follow where there is clarity and security, and that influx of capital can drive market sentiment. Once institutions are confident, retail investors tend to follow, amplifying the momentum. Now, let's talk about how this impacts you as a long-term XRP holder. First, recognize the opportunity. If XRP supply is shrinking while demand grows, holding your position becomes increasingly advantageous. Second, understand timing. Breakouts in markets like XRP don't happen gradually. They can happen in explosive bursts, often triggered by macro events, institutional inflows, or positive news. Patience is key, but so is readiness. If you're prepared, you can take advantage of these bursts without panic or hesitation. Another critical point is volume analysis. Right now, XRP is moving during a period of relatively low volume, which is typical for weekends. However, low volume moves can indicate strength, especially when the price is rising steadily despite fewer active trades. This means that once high volume trading returns during the week, the price has the potential to accelerate sharply. For those watching, this is a signal. Stay alert, but don't rush in without a plan. Let's also tie this to macro factors. Supply chain issues, geopolitical events, and market volatility all drive capital into crypto. XRP, with its established network, adoption by financial institutions, and ETF-backed credibility, is uniquely positioned to benefit from these flows. When other markets are uncertain, money looks for alternatives, and XRP checks all the boxes: liquidity, accessibility, and institutional legitimacy. Finally, here's a practical takeaway for retail investors. Positioning matters, but so does understanding market cycles. XRP moves in waves. There are periods of compression and accumulation followed by explosive upward moves. The goal isn't to chase every daily spike, but to align your positions with structural trends, macro catalysts, and institutional behavior. History shows that long-term holders who recognize these patterns are the ones who see the biggest rewards. In short, we have a combination of three key factors right now: institutional inflows reducing supply, positive macro conditions, and bullish momentum in altcoins. This is the trifecta that historically signals major moves in XRP. For anyone looking to benefit, the best approach is to stay informed, watch for breakout confirmations, and maintain a strategic position that aligns with long-term market trends. Charts and institutional data turn into a practical roadmap that you can use as a long-term holder or even a strategic short-term observer. First, let's recap the setup. We've seen altcoins break long-term downtrends historically, resulting in 10x to 30x gains. XRP is now showing the same bullish momentum. Long-term trends are flipping positive, and institutional inflows are actively locking up coins, reducing the float. Combine that with macro events like oil volatility and geopolitical uncertainty, and you have the perfect environment for price acceleration. This isn't speculation, it's a pattern we've seen repeat multiple times in crypto history. In the upcoming week, there are a few key things to watch. Volume will be a major factor. While we've seen a 17% move over the past few days, it's still during a weekend with low liquidity. As trading activity picks up, expect price movements to amplify if demand continues. Breakouts are often accelerated when thin markets transition into high-volume periods. This means that early signs of upward momentum could quickly turn into stronger, more decisive moves. Next, consider the institutional influence. ETFs and structured products continue to absorb XRP from circulation, creating a supply squeeze. Historically, supply squeezes are critical in producing rapid upward moves, sometimes parabolic in nature. If you've been a long-term holder, you already know how XRP responds when these factors line up. It doesn't just climb steadily, it can explode upward very quickly. This is why timing and awareness are important. You don't need to chase daily fluctuations. Instead, position strategically for the moments when momentum aligns with inflows. Let's also address risk, because it's a key part of any successful strategy. No setup guarantees a perfect outcome, and volatility is part of crypto. Unexpected macro events, Sudden market sentiment shifts or regulatory surprises can cause temporary pullbacks. The key is preparation and perspective. Think in terms of weeks and months rather than hours. Position size, patience, and understanding supply-demand dynamics will allow you to navigate short-term volatility without losing sight of the long-term opportunity. Now, let's talk about practical strategy. Here's what I recommend for anyone holding XRP or considering entering the market. First, understand your position relative to supply and institutional inflows. If your coins are already positioned, hold with confidence, knowing that supply is tightening and demand is increasing. If you're looking to enter, monitor key breakout levels and avoid chasing a rapid spike. Strategic entry points during periods of consolidation often yield better long-term results than impulsive buying during hype. Also, pay attention to macro catalysts. Oil volatility, geopolitical events, and global liquidity flows all matter. XRP is influenced by capital movement just like any other liquid asset, but its institutional adoption makes it more resilient and more likely to benefit from global shifts. When other markets are uncertain, money flows to alternatives, and XRP is well positioned to capture those inflows. Finally, let's put this all in perspective. Long-term momentum, reduced float, bullish macro trends, and historical patterns all suggest a very positive outlook for XRP. Those who understand the market's cycles, recognize supply-demand imbalances, and act strategically are the ones who capture the biggest gains. This is why I'm extremely bullish not just for the next week, but for the months ahead. XRP is positioned to reward holders who are informed, patient, and strategic. To sum up, the current environment is rare and significant. Institutional inflows, supply constraints, altcoin momentum, and macro catalysts have all aligned. Short-term spikes may happen, but the real opportunity lies in understanding these forces and positioning accordingly. Stay informed, stay patient, and keep your strategy disciplined. If you do, XRP could reward you in ways we've only seen in previous altcoin waves, sometimes 10x, 20x, or even 30x for those who are prepared. That wraps up our analysis for today. As always, I want to hear your thoughts. Drop your insights, questions, or predictions in the comment section below. Your engagement helps us refine our perspective and keeps this community strong. Thanks for watching BullionIQ, and we'll see you in the next one where we continue breaking down crypto, finance, and market moves so you can stay ahead of the curve.